All right, scholars, let's take a look now at how we actually work this out. And you can see we're going to use the word wow, just wow, because what we're going to be looking at is preparing journal entries from a trial balance. We're going to be able to pull out the assets. We're going to be able to pull out the liabilities. We're going to be able to determine what the net assets are. And with net assets, there are two categories. There's the without donor restriction and with donor restriction. Wow. WO, without, and the final W, with. That's going to be how you'll report your net assets. Then for revenue, we'll also break it out. Without donor restriction and with donor restriction. And then all of the expenses typically go against the without donor restriction. And from there, we create our financial statements. We have the statement of financial position. I like to think of that as the balance sheet, statement of activities. There's your, quote, income statement. And of course, the all-important statement of cash flows. So remember, there is without donor restrictions. And remember what we've said earlier, that a board designation is not a restriction. Then we have with donor restrictions. Now, they can be temporary in nature for such things as specific purpose or timing. Both of those would fall under with. That's the second W. And then, of course, we also have another category that falls within the with donor restrictions, and that's the into perpetuity endowments. You can see we're kind of locking it up. That's traditionally where somebody leaves a couple $1 million, like my good, rich friend, Peter Sugar Bear Olinto. He puts in a couple $1 million to his alma mater, and he says you can only spend what it earns on such things as accounting education for our people. So that reminds you of some of the basics and how we're going to pull information from a trial balance in order to gain information associated with the related financial statements. So I think you're ready now to try an exercise.